1 million cups. Well, welcome so much. It's great to meet you. If you have any questions, please reach out to me or any of the other organizers who have a badge here. So we're really excited today. A couple of announcements that I have. We will have 2 presenters today. We've got Stephen with Home Lending Pal, and then we've got Trey with Recruitify. So we'll go through both of those. I'll give you a 2 minutes heads up when you're almost done with in terms of time, and then we'll leave time for questions. There'll be 5 minutes in between as Trey transitions over, and during that time, we'll discuss community announcements. So if you have a community announcement during that 5-minute break, I'll give you an opportunity to raise your hand and put the announcement up here during that break, and then we'll transition over to Trey. The other thing, just as a reminder, we will be in American Underground in Durham next week. On July 3rd, with the holiday, we will not have a 1 million cups in here in RTP. We will have 3 meetings next month. So the following week on the 10th, we'll be in Durham. The 17th will be here. Then the 24th, we'll be back in Durham. And then the last week of July, because we do 4 meetings out of the year, out of the month, not 5, we will not have a meeting. So there'll be 3 next month. And we'll keep you updated on that, and that'll be on the website as well. Yeah.
How's the new facility coming?
Yep, so that was the other thing I was going to talk about. Also, in my 3rd announcement, so the new facility, we just got to tour it earlier this month. It looks great. We're working on a time when we will be over there. It will either be next month or the month after is what we're looking at. So we'll have an announcement about that, and that is going to be our permanent location in RTP. So that's going to be right across the street over in, I think, 5 Labs is what it's called. Yeah. Yeah, so more to come on that. We're hoping to try to do that sooner rather than later, but just working through some logistics for it. But so far from the feedback I've heard, the space looks great. Any other questions? Yeah?
When you say permanent, you mean instead of here, but it'll still be back in Durham?
It will still be in Durham. This will be our permanent RTP location, and American Underground is our permanent Durham location.
Because I've heard a number of people say that they don't like driving to Durham at rush hour, and since this is the RTP chapter of a million cups, could we move it all here since you're getting that new location?
Yeah, so we've been hearing feedback on both accounts of it, and that's something that we're discussing as organizers as well, of how we want to do that. And depending on how much critical mass we have, there might be an opportunity to split 1 million cups into 2 different locations on a weekly basis as well. But for the time being, we're going to be alternating since we've got both groups. And then we have presenters like Stephen, for example, who was in Durham last week, and he was here in RTP. So that way, you don't have to necessarily drive to RTP to see a specific speaker.
Yeah, and it's a whole new audience too.
Yep.
So I greatly appreciate the opportunity to kind of just gauge different crowds, gain different feedback.
Yep.
So in my experience, this actually works.
Yeah. Yeah. We hear various things from various people around that too, but we do try to accommodate getting the speaker to come to both locations, like Stephen is kind of doing today.
Oh, thank you very much. Great segue.
Yeah.
Good morning. My name is Stephen Better, COO and co-founder of the Home Lending Pal. Now, before I jump into the presentation, I'd like to get a sense of the room and see who here is a homeowner. Perfect. And how many of you guys use debt to purchase a home? Part of the tribe as well. So with that, I'd like you to think about that transaction, how that process felt. How long did it take for you to get feedback from a lender? Or just make some kind of decision, whether it be pre-approval, commitment letter, or even a actual credit decision? And how transparent was that process? Did you have an actual understanding of what that loan officer's yield structure was in relation to the product that they recommended you? And if you were a loan officer, putting yourself in the shoes of a loan officer, someone who's paid on a commission basis, would you be willing to assume additional risk in order to close a deal quicker or increase your compensation? Now, the reason why I bring up these points is because these are the origins of kinks in this transactional process. And what I mean by kinks, I mean gaps of information, blind spots. Home Lending Pal aims to smooth out this transactional experience. We're applying statistics and automation to an early stage research tool that'll help you identify these blind spots. Now, by helping you identify these blind spots preemptively, we're able to speed up this transaction and make you successful in thousands of mortgage lending scenarios. Now, here's our ask. Our immediate ask is feedback, specifically around the legal and compliance space, right? This deals with just the nature of what we are, a startup. So we want to protect our IP, and we also want to protect our team members, our founders and employees. So legal structuring, IP protection, compliance, compliance is huge. Regulatory is a very regulated industry. So that would be great. And the secondary request that we have is that you reach out to us. If you're interested in this concept, in this platform, in its disruptive nature, we want to hear from you. Whether it be helping us with coding, UI, UX, suggestions, or just learning more about us, that would be greatly appreciated. So please feel free to email us at hello@homelendingpod.com. Now here's the big picture. Purchasing a home is unlike any other purchase experience in the American economy today. And that's primarily driven by two key variables. First one is the capital requirements to purchase a home. Purchasing a home is extremely expensive. I don't know about the rest of you guys, but I don't have about $250,000 in my checkings or in my savings, right? The average home in the US goes for around $250,000. So I have to use debt. And that leads us to the second issue in the transaction, which is the due diligence component of getting that $250,000. And that's when the transaction starts to slow down. And this is the space this tool is intended for. Quick survey. Once you've decided or have committed to purchasing a home, where do you guys start, right? Is it A, realtor? Is it B, loan officer? C, banker? Okay, how about D, other? Friends, family, internet, etc., right? Yeah, most of us are getting energized around D, right? We want other, right? We want to talk to people that we know, we want to talk to people that we trust, or we want to use tools that we're comfortable sharing information with, sort of like internet or what have you, right? So convenience is what drives this choice, right? We want to feel confident in the choices that we make with the avoidance of awkward conversations. And in these awkward conversations that we find a lot of these issues. So what we do, we're early stage research tool aiming to provide you education. How do we do it? Statistics and homogeneity via an active learning algorithm with the goal to smooth out the full transaction. So why should the largest purchase in your lifetime be surrounded by awkward conversations, right? And these awkward conversations are what drive the fundamental problem in the real estate space or in this transactional space. And that's really because of the nature of the transaction. So the mortgage broker isn't really your fiduciary. They don't owe you loyalty, right? So that creates an adversarial relationship between the unsophisticated buyer and the very sophisticated seller, right? One side is constantly trying to win over the other, where one side, the seller, for example, the lender, is willing to assume additional risk in order to get you into a package that they could close very quickly, right? Versus the buyer, ourselves, right, who don't have the resources that the lender would have, so we tend to hide information, right? In order for us to try and get an advantage in this transaction. We all know what this leads to, right? The issues that popped up in between 2007 and 2009 kind of were driven by this information asymmetry, right? So what's our solution? Our solution is simple. It's an underwriter in your pocket, right? So the sophisticated transaction with the sophisticated side of the lender has the solutions. It's had the solution for a while, right? It's had underwriting. So what we're simply doing is automating all of these resources that the lender has and putting it at your disposal in a very early stage. So by the time that you see a home that you like, you're in front of the for sale sign, you simply push a button and we're telling you the probability, the odds, and the process that it would take for you to be able to purchase this home immediately. So Zillow and Redfin and Trulia disrupted an industry by opening up MLS to the average consumer, right? What we aim to do is to disrupt this transactional experience by giving you the guidelines and guidance up front before you're prepared or before you even want to pull the actual trigger. So, what does this look like? Pretty much what we're doing is connecting your personal, financial, and credit information along with a survey, asking you a series of questions to our learning environment. Right? We then synthesize this information down, and we provide you feedback in regards to what are some of the blind spots that you're going to come across in this mortgage application. Right? We coach you up, we train you, we run you through different types of scenarios. And then once you're ready to make this purchase, we then repackage the information and pair you with a lender. Right? The lender then reviews a series of different ratings based on this information that you provided us, and then they either decline or accept the referral, and at the point where they do accept, money is exchanged between us and the lender. So this is kind of what that user experience looks like. So we'll verify your assets, we'll look at your credit health, and then we'll provide personal recommendations. And then max that to a specific set of financing options. And pretty much this is the process that I just described is our actual business model for now. Right? Our front, we have two specific groups that we're looking at in terms of front-end usage, which is typical, which would be the typical bars, it would be us. Right? We're looking at the specific age demographics are falling between the ages of 25 and 37, making over 40,000 per year. And this is a demographic that looks to be informed, provided guidance, wants to understand and compare options. And the other one is the mortgage lender. These are independent correspondent lenders who are looking to minimize uncertainty. They want to know that they can close a deal, and they also want to maximize their net present value of time. So they want to make every engagement with you count in order to monetize. So our platform aims to address both of these issues. The model that we just talked about was the cost per acquisition model, where based on the scale and quality of rating of that lead, we will attach a fixed rate. The other revenue options, such as the cost per click, hybrid models, these are all ad push types of models based on profiles that the lenders will be building in our system. And the other is typical ad sales. Now, these three options are based on scale, we're just exploring them, but all of our projections are based on this specific revenue stream. Now, what validates us? Well, the market validates us. Millennials, ages 25 to 37, have been the largest purchasing demographic for the last 4 years in real estate. So people who are between the ages of 25 and 37 have been buying the most homes in the U.S. economy today, right? Out of all of these homes, 88% of them have been financed and used a mortgage, while 98% of purchasers below the age of 37 have been using debt. So the millennial demographic is like almost at 100% in terms of using some kind of financing option, with 99% of them using the tech as a tool in order to make these decisions. So this may be a very attractive tool for the typical millennial consumer. So what does that market opportunity look like? Well, the growth rates are extremely impressive for online mortgage market. It's projected to, so between 2010 and 2016, we had about a 30% growth rate. That's like almost a 5x multiple from 2010 to 2016, with this projected trajectory continuing, hitting 272 billion by 2023. So I added these slides to kind of differentiate what we typically do. Yeah, we kind of sound like Mint, but Mint doesn't go into the sort of income model that we do. kind of sound like Credit Karma, but Credit Karma doesn't do the credit modeling or the credit scenarios that we will be able to do, currently are doing. And Rocket Mortgage, Better Mortgage, those guys are originators. Most of the technologies that they're bringing to market are based around their product. We're kind of a cost and comparison platform. Think of us like an Orbitz for mortgages, if you will. These are other differentiators, kind of highlighting who we are. And I want to emphasize that this X, we're not an originator. We don't bring new money to market. And again, another piece is that we're early stage, right? You're using our tool before you're actually seriously committed. This is where you could come in and explore all your different financing options. So, this is our growth projections. They do seem a little aggressive, but the key takeaway is the break-even point. Break-even point is at 9 months or Q3 after our initial launch due to the seasoning of the expected number of members that we'll have by month 6, which is that expected 100,000 members by then. So we're raising capital. Right now, the largest need is our production, our development costs. Right now, most of the functionality has been built out of a web app. We're looking to transfer all of that into an actual application that's extremely expensive. The other large chunk is going towards regulatory and legal needs. This is an impressive piece of IP that we're developing, so we need to protect it, with 25% going towards licensing and 15% going towards customer acquisition. And this is our thing. This is the slide that gets me the most energized. So I remember on this slide was just me and Brian. Now we have a fully sophisticated team behind us. I know a lot of you guys know ZD Ortiz. She's a PhD in the data science world. She's a lead in IBM and Lenovo. Extremely good at what she does, as well as Alexander Cohen. He's also the lead data scientist for web.com. So we're growing in a very aggressive clip, and we're ready to truly revolutionize the mortgage lending transactional experience. That is my time. Any questions?
Thank you so much, Stephen.
Yes.
One thing that you might want to not conflate when you make this presentation, particularly since you were a mortgage broker, do not conflate mortgage broker with loan officer.
We're not mortgage brokers.
No, I understand that. But you were using the terms interchangeably, and it's very confusing to a lot of folks, because the people at the bank are, the people who are the loan officers, the people who are trying to underwrite the loans that the brokers are bringing them, or retail customers, right?
So,
they are salaried employees.
I'm kind of curious to kind of explore this. So what is the difference between a loan originator and a mortgage broker? Do you know?
The mortgage broker is just a salesperson trying to make a deal and collect commissions. They're brokering deals between many lenders. And you said, like you mentioned, they're not working for you, they're working for themselves. That's true. But, here, there's a reason why I'm bringing this up.
What does a loan originator do?
The loan originator at the bank is the one who's trying to actually figure out if the bank will take on this risk.
That's incorrect. See, the loan originator at the point of sale, as well as the mortgage broker at the point of sale, are pretty much conducting the same due diligence. The only difference between the loan originator and the mortgage broker is the source of funding. That's only really the key difference. In regard to the underwriting, they all have different back offices that do the actual legwork. Some mortgage brokers have some type of corresponding relationship where they would send it to this point or financing origin. But for the most part, they're the same thing. For the purposes of this conversation, they are.
Right. Well, no, there was a reason why I was getting at this, because the people in the banks, because of a lot of regulations, have had to really tighten who they're loaning to, because of the financial crisis.
So that's kind of why.
So if you're trying to help untap many new private sources of debt funds that potentially will want to work with your customers, I think that's a very interesting business model.
Okay.
So if you're trying to disintermediate banks with legitimate borrowers, I think that's a great business, a very interesting business model, because there's a shit ton of private capital that you've never even heard of. That's big. and they're looking to lend.
Yeah.
So-
Yeah, but that's the point though. We want to stay away from origination. Right? We don't want to be seen as a source of funding because of the fiduciary nature that we want to build with our clients. We want to put our clients first. And so we don't want to maintain any specific loyalty to any actual lender, right? Our commitment to the lender is full transparency, minimize uncertainty, and to maximize their present value. That's what our commitment to the lender
Yeah,
is.
you're creating personal profiles so that when they're shopped around, somebody is gonna say, I want that customer.
Well, not for the customer, right? The people-
Meaning your customer, they're gonna say, I wanna do business with that person.
Right, the lenders, right? Is that who we're
Yeah.
specifying? Right, they eventually, once we get to scale, the goal is for them to set up their own profiles, set up their own community, and drive traffic to the platform, or us help them expand their business, right? If they're good at what they do, we wanna work with them. If they're not, then, next loan officer up, right?
I do want to keep opportunity for other questions as
Yeah.
well. Anyone else?
Sure.
Yep.
Right now, while you're developing this, are you looking at regionally right now with, when you do your expansion, of course, a national footprint?
Right,
So right now, what's your focus? What are you?
Right, so I'll take this slide back up to our current team. So I'm currently working with Joey Barr. He is a branch manager, one of the best branch managers, I think, in the Carolina region. So what we're expecting to do is kind of work with them to actually pilot our system. So we're initially looking at the North Carolina area only, but potentially Florida as well. That's an ongoing conversation. But initially, what we're building out, most of the actual feedback functionality, it will be with clients here in the North Carolina area. Just so, because we want to control this as best as possible, right? And we want to make sure that we're providing the best feedback possible. So we kind of have to scale up to that national footprint, in my opinion. So yeah, we're just starting here locally, testing things out, and then hopefully Florida and California will be next, and then the world.
I think there was another gentleman up there. You had a question?
So I'm a little confused. So is it basically like a lead gen affiliate marketing, and that's how you're getting paid?
So it is a lead gen play, right? We are generating leads for lenders. That's how we make money. But our mission, our focus is client driven, where we want to educate. We want to provide fundamental value to these debt acquisitions, right? Because you're paying money for them. Debt isn't free. So a lot of the times we blindly assume some type of debt, but we don't understand what that cost is and how that impacts us for the long run or our actual lifestyle, right? Especially with a home, there are tons of hidden costs that are associated with a home from zip code to zip code. You don't see that when you're buying a home, nor is that underwriter taking that into consideration. Only carriers that really you're able to make that payment. But you would want to know whether or not you can afford, that dinner Saturday night with your family anymore. So yes.
So when you showed the analysis, maybe this is kind of confusion. I sort of think of you as you're a broker of brokers. And you do the initial credit approval screening for customers, so like Rocket Mortgage, they know how much they can borrow. But what I didn't see in your presentation were things like ratio analysis.
Yeah.
Right? And that's the sort of stuff, that plus relative equity appreciation are kind of the two things that a homeowner's gonna wanna know when they look in an area whether or not they can afford and should buy and at how much.
Yeah, so the ratio analysis is conducted as soon as you plug it into, you may not be able to see it.
Okay.
Yeah, but in terms of DTI, in terms of free cash flow, in terms of post-acquisition free cash flow, in terms of credit projected improvement targets, we're providing all that information to you. So there is.
Because that's kind of the juice of everything you're doing that makes you different. That's maybe not something you should gloss over as much, because that's what would make you different than Rocket or anyone else, that gives a consumer an idea of, are you gonna be pre-approved? can you go and look
Yeah,
at how
that's-
much?
that's
And then they'll shop it later.
Yeah, that's the point of that's the point of the platform. If I understated that, I apologize.
No, it's
But-
it's totally okay, I just think that's what will have people understand what you're doing.
Yeah, but yeah, we were providing extremely robust feedback.
Tony, you wanna, I know you've been waiting.
Yeah,
for
Tony.
We're gonna connect offline, so love to continue the dialogue. I think it's a great value prop that you have, but the messaging is not completely clear to me as a consumer that you're on my side. So I'd like to hear that on front, an underwriter on your side, or something, you know, where the borrower is first, or automated, something that says right here, boom, right in my face, you're helping me. You're not about the lender, you're not about a third-party broker with some other interest, you're all about me. So we'll talk more about it, but that's just
Okay.
the clarity of the value prop and the messaging.
All right.
Yeah, gentleman over there.
Yeah, my question goes a little bit to what Tony had to say. You keep referring to you having a fiduciary responsibility to the
Yeah, it's not-
front end
yeah.
user, which has a very specific meaning in my world. Right. So how do you, one, come up with the mortgage originators on the backside who are paying you for leads, and two, how do you determine which lender is going to be prepared with each of the clients? And I guess three, like, if you have a fiduciary responsibility, you know, wouldn't you want to allow the client to be able to use lenders from anywhere, just not what you have in your network?
Right. So, great question, and you're absolutely correct. There isn't an actual agency between us and the actual client, right? They don't sign an exclusive contract in the same way that you would sign an exclusive contract with a realtor.
Right.
And that's sort of the issue with the problem itself, that in any lending scenario, there isn't an exclusive contract. And that's just because of the nature of debt. You don't want to be held captive or be handcuffed to a lender that can charge you pretty much whatever you're pretty much at a lender's will if you do sign some sort of exclusivity with them. So, in the sense of us saying that we're the broker, saying that we are the client's agent, is is our commitment to that client. Our client is who comes first. The purpose of this platform really is education. From the inception of this concept, when I sat down and kind of worked through it, it was customer first, it's customer focused, it's customer driven. And I get it. There may be some concerns in the way that we make our money, right? You know, the lender is who's actually paying us, right? But in the sense though, we're feeling that we're building such a compelling tool, and we're looking at such a large share of the market and the uniqueness of this tool currently in the actual marketplace, that we feel that we would be a vital tool for any lender to have in their actual toolkit, especially as we scale and we can start dominating market share. And I get it, yeah, that's a bit of what's the saying? Throw in the dark, or you know, kind of shooting blindly. But for the most part, I think we make a compelling case that we are committed to the client.
If nobody else.
Yeah.
I was just gonna follow that up, is that your revenue model makes the originators your actual customers, which means your responsibility is to them as the customer, not the actual person that you're bringing in. That's your product, right? And I think that your target market, the millennial generation that's tech savvy, is savvy enough to understand that. So that may be something that you really have to work on clarifying
Yeah.
for the people that are coming in and using your product, because that would make me skeptical as somebody who was invited to come in and use that tool.
Yeah, and your concerns are well noted,
Yeah.
right? But the way we're designing the system, it's based on impartiality, and we're letting data drive the decisions and the pairing between lender and borrower, right? The borrower can truly can feel confident that what's driving their connection to the actual lender is not me, nor is it the money that these lenders are paying us. It's how well that lender does their job with respect to that client's specific need. Our pairing algorithm is pretty much synthesizing down or breaking down specific attributes that a lender has or has provided us, and connecting those to you know, these successful achievements in that person's sales career to that client's actual need.
Yeah.
So it truly is an impartial arbitrator.
That would
the
almost
actual
need to be
transaction.
something you would need to highlight as, you know, a unique value proposition to you and really get that out in front to the front face users, not your customers.
We have time for one more question. I think you have another one or comment? Anyone else?
You know, in light of all this conversation, I think, you know, part of what you're really getting at here is financial health, right? Financial
Yeah.
education equaling financial health. And so many people in America can't even come up with $4,000,
Yeah.
right? So if you are a tool that is helping somebody create a set of financial health, you know, some banks have kind of tried to do this, but you're a neutral party.
Correct.
Which is kind of interesting. So that might be one way that you pitch this, because it could be applicable to any sort of financial or transactional thing. It could be a car loan, it could be credit to purchase a
Yeah.
business, it could be a lot of things.
And you're hitting the nail on the head. See, this is where we see this product going. This product is intended for you to understand what the weight of that leverage really is, right? And down the road, what we want to truly become is a robo-advisor on all things debt. We want to go from the home lending pile to the lending pile. We're starting with home lending because home lending comes at a very high bar. It is the most difficult. Exchange in our consumer market today. You know, buying a business could get a little more complicated. Gets a lot more complicated. But for the average everyday consumer, this is a huge hurdle. So if we're able to tackle this product early, be successful with it, we can transition this algorithm to provide you feedback on everything from the credit card acquisitions to what debt consolidation is for the credit, which we're currently able to do. We're running this algorithm through simulators and providing fundamental and robust feedback on ways to actually improve your credit. We're not credit repair, right? But we are able to identify these weak spots and provide fundamental feedback into that. So yeah, you know, it's difficult to wrap your head around a model that's built for a customer-facing front-end user like ourselves that's using banks as their source of funding. But you have to rely on the data. You have to rely on the actual algorithm that we are pairing you with the best option possible.
So is it worth $20 a month to have my house in order? No pun intended. It might
So
be.
charging.
Yeah, it might be.
Front end. You know, that might be an option. We've discussed this, but you know, in order to drive membership growth, you know, I think that's a trade-off. And I think that's a trade-off that we're already currently doing today, right? We're giving all these banks, all these companies our personal information, right? Wouldn't you rather have more control of that personal information? We're not pairing you with a lender until you pull the trigger and decide to move forward with that lender, until you feel comfortable with that lender. And again, to answer somebody's question too, right? You can talk to whoever lender you want to. You know, you don't have to solely work with the people that we're recommending you, but you can be reliant on the recommendations that we're providing. And you can take those to the banks, right? You can take it to the bank, and you could actually, you know, feel confident that that this is what this product is going to cost you, and that this is how it's going to affect your lifestyle. Because our analysis runs that deep. We're letting you know what this debt means to your, I don't know, TGI Friday, Saturday night dinners or whatever, you know.
I can go over to